In the upcoming trading week, markets are poised for a series of major macroeconomic releases, some of the most pivotal of the summer. Amid shifting interest rate expectations, inflation data, and rising geopolitical tensions, global capital markets are entering a phase of heightened volatility, with direct implications for Bitcoin, Ethereum, and the broader crypto sector. The week begins with the release of the US gross domestic product for Q2. This first estimate offers key insights into the real growth potential of the world's largest economy. Especially after recent fluctuations in consumer data, investors are awaiting this signal with close attention. By Tuesday, the focus shifts to the US Federal Reserve. The interest rate decision by the FOMC committee, followed by Chair Powell's press conference, is among the most impactful events of the quarter. Markets are highly sensitive. Each phrase has the potential to trigger immediate price moves, both in traditional and digital assets. On Wednesday, the PCE inflation numbers will be released, one of the Fed's preferred gauges for price pressure. A higher reading could reignite rate hike expectations, while a decline may offer short-term relief. Bitcoin and Ethereum typically respond directly and significantly to such data. On Thursday, two leading indicators will follow: the ISM PMI and consumer confidence. These give early clues on economic momentum and spending behavior. And on Friday, the week closes with the non-farm payrolls, arguably the Fed's most watched labor report. Strong hiring may signal economic resilience, yet also stoke inflation concerns. Geopolitical tensions further influence market psychology. Recent statements by former US President Trump regarding new tariffs have already weighed on sentiment. Combined with ongoing conflicts in the Middle East and East Asia, the result is a fragile equilibrium. Commodities, currencies, and risk assets remain in the crossfire. The crypto markets are no longer detached from this. On the contrary, Bitcoin's correlation with traditional risk assets has significantly increased in recent months. Another factor this week involves blockchain-related events. While there are no large-scale token unlocks ahead, the Ethereum staking upgrade, part of the Shanghai release, may introduce sustained selling pressure over time. Smaller unlocks from projects like AVAX, Avail, or Carrot are already priced in and are unlikely to cause broader market movements. The current Crypto Fear and Greed Index points to a neutral to slightly cautious sentiment. Bitcoin dominance stands at around 65%, reflecting a defensive stance among institutional participants. Ethereum holds steady near 9%. Altcoins remain underweighted. The limited rotation into small caps suggests a market focus on large, liquid assets. So what does this mean for algorithmic trading and quantum data analytics? Our systems don't act on premature signals. They act with data-driven precision. In this current environment, we proceed with extreme caution. Market dynamics are intense, but a full reactivation of our trading operations requires clear directional signals. Should the Fed unexpectedly lower interest rates this week, it would mark a strong bullish impulse. Just as a diplomatic breakthrough in transatlantic trade would immediately boost market risk appetite. At the same time, we are observing a shift in the US towards an easing cycle. This policy transition marks a strategic inflection point. Based on these developments, we are preparing for a full-scale reactivation of our algorithms. But for now, patience is key. The next set of data will determine the full picture. Until then, our positioning remains cautious, selective, and strictly risk-adjusted. We do not make price predictions, but we analyze markets systematically, transparent, traceable, and without any investment advice. We navigate a week full of signals, strategically, with discipline and calm determination. Quantum data analytics. Analytical, strategic, innovative. www.quantda.com